With rates still high and markets volatile, investors are rethinking how they generate income. One solution gaining traction: the JPMorgan Equity Premium Income ETF, ticker JEPI. JEPI is an exchange-traded fund launched in 2020. It seeks to provide monthly income and reduced volatility by combining the following two components: a portfolio of large-cap U.S. stocks and a systematic covered call strategy implemented through equity-linked notes. This combination seeks to smooth returns and deliver income, especially during volatile or sideways markets. As of mid-May 2025, JEPI trades around $56, with a dividend yield of 8% and a 0.35% expense ratio. The fund currently manages over $39 billion in assets and holds 129 positions, with no single stock making up more than 2% of the total. Sector-wise, the ETF is diversified. Information technology, financials, industrials, and healthcare are the largest exposures. Holdings include names like MasterCard, Visa, Trane Technologies, Progressive, Meta Platforms, and Microsoft, pointing to a preference for companies with stable fundamentals and relatively lower volatility. To assess JEPI's potential resilience, it's worth considering how income-generating strategies like covered calls have historically behaved during volatile markets. While these approaches don't eliminate risk, they tend to offer a different return profile compared to traditional stock or bond portfolios. If you'd like to explore how JEPI might perform under different market conditions, here's a sample AI prompt you can run through tools like ChatGPT, Perplexity, Gemini, or Kavout. This kind of prompt helps simulate different scenarios and stress test income strategies based on volatility, yield, and drawdown history. You'll find this prompt and others in our weekly newsletter, AI in Investment Research and Finance. The link is in the description. So far this year, JEPI is down 2.6%, whereas the S&P 500 ETF, SPY, is up just 0.1%. But the real draw remains its income. As of May 12, the 30-day SEC yield stood over 11%, outpacing bond ETFs like iShares Core US Aggregate Bond ETF, AGG, or Vanguard Total Bond Market Index Fund ETF Shares, VND. JEPI isn't the only ETF using a covered call strategy. Each one, however, varies in stock selection, option writing frequency, and yield structure. JEPI's distinguishing features are its active stock selection and use of equity-linked notes, offering a balance between income and capital stability. However, before investing, it's important to be aware of a few key factors. JEPI's upside is capped, meaning it may underperform in strong bull markets. Income from equity-linked notes may face less favorable tax treatment, especially for investors in higher tax brackets. It's not a complete portfolio solution. JEPI should be used alongside other assets like bonds or alternatives to maintain proper diversification. JEPI offers a rules-based approach to generating income in uncertain times. But like any strategy, it comes with trade-offs. Thanks for watching. If you found this useful, subscribing helps you stay up to date. More investment research prompts and ETF analysis are also in our newsletter, AI in Investment Research and Finance. Link in the description.